Good morning and welcome to the Radix Big Tent event here in the glorious surroundings of the Dean's Gardens in the City of York. My name is Jonathan Cowap and I am here as your chairman facilitator today. The theme for this year's Big Tent is regeneration, and our topic for discussion in the next hour is big business and whether or not it's part of the problem, or whether where regeneration is concerned, it's part of the solution. Let me introduce your panel today. Joining us this morning, Charlotte Jones, who is Group Chief Financial Officer for Aviva, and she's the one with the supporters club on the back row. Our second panellist, Sir Vince Cable, former business secretary, famous son of York, of course, and completing our panel of three, Councillor Pete Kilbane, who is the, I'm sure you have, no, who is the Deputy Leader of the City of York Council. Just a word or two before we hear from our panellists. This event is about politics, but it's about politics with a very small p. It is meant to be an exercise in finding answers and focusing on solutions and areas of agreement. It's about listening to one another, which is the theme of the whole Big Tent project, and getting away from the usual noise of the confrontational politics of Westminster and what the media throws at us all the time. Vitally, it's an opportunity to hear what other people have to say, and it's a chance for you to speak, and that is why at least half of our time today is going to be spent hearing the questions that you have to ask, you want to ask, and the points that you want to make. So, down to business. Does the private sector, does big business have a role to play in regeneration? And if it does, what should it be? How can we create a win-win situation from private sector investment when it comes to regeneration? Please, as we go along, if you have a thought of a point you want to make or a question you want to ask, we shall come to you in about 15 or 20 minutes time, maybe sooner. So hold on to that thought and you'll get the chance to discuss it with our panellists. But can I ask our first panellist, Charlotte, to begin?
John, lovely to be here this morning. So the question posed, does the private sector have a role in regeneration? Well, in a simple word, yes it does. And can big business be part of the solution? And I would say yes, it has to be. Now, of course, I understand there could be scepticism out there. Unbridled capitalism has had a patchy track record, to say the least. But private companies, such as us at Aviva, and many other similar ones, are part of the communities, and we are delivering projects in those communities. Challenges faced by the communities, whether they're social, economic, or indeed the really big points on the scale of climate breakdown and biodiversity loss, are our challenges as well. So, I don't feel it's very easy to view big business as some kind of faceless, impersonal machine, entirely separate and distinct from people. We have to acknowledge that there are fundamental challenges in the UK around how we ensure growth that is not only sustainable but also delivers across communities in cities, towns and in rural locations. Which takes me to levelling up. There is to a point a broad consensus on both sides of the political aisle on ensuring all parts of our country are growing, productive, and have the ability to carve out their own economic narrative and journey. The new devolution deals are clearly an important part of that, with York and North Yorkshire set to see its deals start from next year. Whilst as business we are agnostic as to how or what the political structures are and talk to all sides of the spectrum, we see clearly how we can embrace and align towards regional economic plans and help delivery through investment. And the reality is, if we want the level of investment that we really need to transform our communities, the money has got to come, in part, from the private sector. Public funding can absolutely help unlock development or invest in innovation, but without leveraging the sources of private capital, it will only be of a certain scale, and that is not simply enough. But it's not just about capital. It has to be where the capital comes from and whether it is invested for the long term and to deliver the outcomes that are aligned to the needs of the community. So what does that mean in practice? If I can indulge you in a slightly technical policy term, and this is my CFO side coming out, Solvency II reform, which is happening right now, will expand the types of projects and developments that might benefit from private capital. It will allow for the major investment needed to finance regeneration projects and the shift to net zero. Everything from green energy to transport, housing, manufacturing. But what it also enables is the alignment of UK pensions. Do I sound like a Dalek? Savings, financing UK development projects. Surely this is a win-win for all of us. So the time is now and the opportunity is here to work together to build the next version of public and private sector partnerships, which, working with private capital, can create a programme of change for our cities and regions such as York and wider Yorkshire. So, if I've managed to persuade you that we do have a role, then what does business need to commit its private capital? We can't escape the fact that investment from the private sector needs to have a financial return. That's critical for the purpose that we invest, protecting our policyholders' interests. Therefore, we need stable national policy, certainty. Our timelines for investment are 20 or 30 years, so stable policy and direction that can begin to match those periods from all levels of government is key. Levelling up will not be delivered in a quick window of time, as we all know. It is a multi-decade vision, and that matches firmly with how businesses like us like to think, plan, act, and therefore invest. We need to be able to understand what the pipeline of projects is likely to be. We also need more capacity in the planning system. We need investments in skills, and we need to have faith that approved projects today will still be viable in a few years' time. I think we need to work together to help meet these needs. And they are not just our needs as business, they are the needs of our communities. And I don't speak for every company, but I think it's fair to say that increasingly there are many businesses that want to embrace the challenges we face and want to work in partnership to deliver the right outcomes for our economy and communities. The private sector is not the panacea, but I firmly believe we have a big role to play that goes beyond our core business function to deliver for our communities, which in York we're very much part of with 1,900 employees, so very much part of those communities as we are in York.
Charlotte, thank you very much indeed. Bit of a challenge there to politicians to make sure that projects that get started continue and have got some future. I'll pass the microphone next to Sir Vince Cable.
Well, thank you for asking me. I mean, this is sort of a massive subject. I mean, we could be talking community project level or national and somewhere in between. But since I think the focus here is primarily on York development and some of the controversies around central New York, I'll just start off at least by talking about community regeneration. I mean, I think that the problem often happens in the UK that we have political polarisation. It's either sort of private good and public bad, or public good and private bad, and the two extremes we know just don't work, because if you have a very heavily private-led development with minimal municipal or national intervention, you're going to get development that is deficient in infrastructure, probably poorly designed, doesn't have social housing, and a whole set of antisocial features. There are equally problems on the other side, and I know from personal experience, because I started my political journey, as it were, in Glasgow. I was a Glasgow City Councillor in the early 70s, and we believed in private sector bad. The private sector was systematically excluded from large-scale redevelopment. And it had one big advantage, because redevelopment really happened very quickly. I think we built more houses in Glasgow in 5 years than in the whole country in the last 5 years. I mean, it was massive. And they were delivered on time. Because it was a public sector monopoly, the property was shoddy. Several of the big developments like Red Road had to be pulled down after a few years. They were so bad. Took no account of individual choice. So if you were a tenant, wanted to expand your family, improve your home, move across the city because you get different jobs, there's no scope for doing that within a kind of Soviet-style planning system, which is what we had. So that didn't work either. And in practice, when we talk about regeneration now, I think, we're talking about hybrids, getting a combination of big business, small business, and public authorities. And in a way, the role model is probably Docklands. I know Docklands is very specific. It was massive. There isn't anything quite on the same scale anywhere else in the UK. But it did have some. It is a major success story because it started with a clear understanding that there was a big role for the business sector to take the big risks in regeneration development, that the public sector was there to provide infrastructure, social housing, amenities, and it was getting a blend between the two. And to prevent the ideology getting in the way, you created a freestanding institution, a development corporation that had nothing to do with day-to-day council politics and was sort of insulated and could operate on a long-term public-private sector working together over a period of decades. And it has sort of delivered the goods. And one of the things we've now realised is that although there was a lot of grumbling about the fact that big business was making money out of it on a big scale, the Reichman brothers in Canada, who were the big prime contractors, we've now discovered actually letting the private sector take the risk has some advantages. In fact, their companies almost gone bankrupt because of the change in work patterns and the use of office development, falling rents and so on. And I think there's quite an important lesson there. When I was Secretary of State, I was taken to a place called Woking. It's not a place you normally go to by choice, but it's a slightly impersonal kind of outer London type development. And at the time, it had a council that wanted to show that councils could be really entrepreneurial. It was Conservative council, and I think they rather fancied themselves as kind of market operators. And so they did their own development. Surprisingly, you had a Conservative council wanted to exclude big business and do the development themselves and make all the profits from what was going to be a brilliant project. Well, it turns out, and you may have followed this in the press, that Woking Council is now bankrupt. It's one of the few councils in Britain that has been allowed to go bankrupt because the commercial guesses they made were wrong. They misjudged the property market, and it's a very unpredictable market. They went bust, and they're now having to be bailed out by central government. And I think there is a lesson there, which is that it's easy to have ideology here, but the essence of good regeneration projects is a sensible sharing of risks, and that the public sector, the taxpayer, the ratepayer, whatever, can't carry all of it. And having business there to carry the risk and make the profits, if there's an upside, is a sensible way to proceed. I was going to say a little bit about the bigger question about how we will relate this to national strategy and climate, but in the interests of brevity and continuity, I'll pass it.
Thank you, Mr. Vince. Yeah, I'm sure we'll come back to that. I'm sure we'll hear from someone in Woking in a moment or two's time. I do want to pick up in a few minutes' time something you just talked about.
From our business actually don't belong to us. They belong to the society within which it was made, led to the development of things like New Earswick. I don't know anybody that's new to York. Go and have a look at New Earswick Village before you leave. It's about 2 miles north of the city. It's a beautiful model village. I mean, a bit full-size model village, you know, I'll tell you what. That is still a desirable mixed income place to live. There's over 2,000 people live there, I think. And from that attitude that actually, you know, the excess profits we've made don't belong to us, they belong to the society that we're in, came Roundtree's Park, which I will say is easily the finest park in York. And it's just a coincidence that I'm a ward councillor for the area, but it is easily the finest park in York. From it came a social housing trust, which exists to this day, housing hundreds of thousands of our residents. And of course, from that attitude came the Joseph Rowntree Foundation, which is the preeminent policy research body in the UK into tackling poverty. So, I guess my provocative question to you is there anybody else in the audience who thinks that excess profit should belong to the society that it was created in? What Rowntree's did was not philanthropy. They genuinely believed that excess profit belonged to the society which made it, because we can't do business without society, can we? None of us can be in this room without walking down the roads and coming to a place that society has organised for us. And then I'm suspecting that most companies won't think, hang on a minute, who does this money belong to, when they're going through their annual returns. So I suspect that most companies will think it belongs to themselves. So my question then is, can you see any scenarios in which those companies who are involved in regeneration will actually spend the money on things that are not going to give a return to them? So New Earswick Village, Rowntree's handed that over to a development trust, a self-managing development trust, after they'd built about the first 30 houses and ceased to get any return from that, having bought the land. The park, as soon as it was constructed, was handed over to the corporation, as it was called in those days. So is it possible for a big business to do that now in a regeneration scheme, or are the forces of global capital so great that if they were to do so, they would soon find themselves being wiped out by their competitors who are offering a bigger return to their shareholders? Are the demands that are on these businesses to actually meet the pensions of the people who are investing in them so great that there's no room for them to have that approach anymore? And if that is the case, are we going to end up with businesses being dominated by asset managers? I mean, I'm not going to have a go at asset managers. I was out having a drink last night with a very, very nice one. But are big businesses going to be dominated by asset managers like BlackRock, who are simply about extracting as much value as they can possibly get from a project and then selling it on for the highest price as fast as they can to enrich themselves and also to pay the shareholders who invest in them, because they're going to do that very thing? So, philosophical questions, I guess, but I think it might be good to stretch the debate a little bit in that way. Thank you.
Thank you very much. Well, funnily enough, just to continue the conversation, you, Councillor Kilbane, have just highlighted a question that I wanted to put to Charlotte, and it seems to lead on. If you're going to have private capital involved in the whole process of regeneration, how do you induce private capital to do that? What's in it for private business? Is it purely to bring a return to your investors? Is the bottom line the mostly important thing? And is big business, because it's protecting its finances and its reputation, is it necessarily risk averse when it comes to regeneration schemes?
Well, I think if I give the sort of Aviva example, but I think you can extrapolate it. You know, Aviva's mission, vision, strategy is broad. Yes, of course, there's a financial component to that, and that is important in making sure that we have all the money that we need for our policyholders when they call on us, so our customers. It is important for returns on shareholders, and therefore continuing to have investors so that we remain a sort of ongoing viable business. But we have many other missions as a company. So we have a very clear commitment on net zero. So we have, you know, that objective to achieve, and therefore we need parts of our strategy and execution that takes us forward on that mission. And so one of the ways that we're helped on that is ensuring all our operations are sustainable, but also what we invest in, how that drives part of that mission. So we have broader missions than just the financial one. So, and actually the commitment to being part of the communities in which we operate. So we have 1,900 people here. We have a big business in Norwich, another big office in Bristol, and we're very dedicated to the communities there, for our people, for our customers. And so, if I look at how much we've invested in infrastructure and regeneration type products, it's we've got a commitment that's around 25 billion overall. We're already up to 7 billion, and all of that is in infrastructure investments that is driving some of the change, whether it's net zero, regeneration, supporting different parts of the region. So actually, when you look at our corporate mission and objectives, yes, of course, there are critical financial ones, but there are a set of more holistic ones, which makes us a responsible employer, responsible for our customers and the communities in which we operate. So really important, tangible goals that are much broader than the pure financial metrics.
Thank you very much indeed for that. Can I come back and do as I said and pick up, I'll come to your questions in a moment or two. The point that you made about, Sir Vince, about people having a choice, about the community being part of the process of regeneration, so that it is something that they are involved with, not something that's imposed upon them. How do you achieve that?
Well, you've got to have a mix of public and private sector involvement. But let me just give another example. Until a year or so ago, I was chairman of a social enterprise bus company. We were trying to compete with Stagecoach and First and all these people. And it was a brilliant concept, instead of having excess profits, any profits would be distributed in the form of socially minded accessibility transport schemes. And it worked, very well for a period of years. But then you hit trouble, pandemic, then higher energy costs, and we were in trouble because you don't, if you're a social enterprise, you don't have an equity base, you don't have any risk capital. So who you depend on for your capital? Your bankers. And if the bankers see trouble, they call in their loans. And so, we've had to fold up the company, and part of it's been sold off to Stagecoach, and a terrible tragedy. So I think although these, the idea of community participation, getting a share, all that kind of thing, sounds wonderful, actually pinning these arrangements down in reality is very, very difficult. And that's why you do need private business to take some, or in many cases, a substantial share of the risk. And if they take a share of the risk, they take a share of the upside. And if it's a highly successful development, they're going to mint money. And if it's not, they're going to lose money. And, any realistic approach to redevelopment has to start with that understanding.
Thank you. Right. Greg Peter is about to tell us in the next few seconds that we've reached the halfway point in our debate and discussion. So at this point, it's time for your questions. Do we have somebody with a microphone around who can pass it to our audience? Do we have somebody as a runner with a microphone? Or failing that, you can use this one. So I think your hand went up first.
Okay, so I want to come back on what you were saying about the Docklands scheme, because many local people had a very, very different view of it. First of all, it was hugely subsidised. First, the dock companies themselves, because they dumped their waste, basically. So there was a huge Cllr operation, which was state-funded. DLR was state-funded. The roads were state-funded. That was a massive subsidy. And the corporation was totally undemocratic. It had no local input. Whole communities were removed from the area. So I think there's a very different view of that. And that was because it was basically commercially led. There was no. So if you've got a commercially led one, it's all about maximising profit, which is the legal requirement on companies to maximise profit. And if they do social good, it's either around the sides of that, or because they think it's good publicity, nice for their image, and there'll be a return on it. And so I think actually we need to get away from this idea that much of the profits of companies are what they generate. They don't. Much of the profit that companies generate is actually either because they're dumping things on us, whether that's sewage in rivers rather than investing in that, or whether it's these roads and rail schemes that provide them with massive stuff. So there's a huge mega problem with the whole way it's set up, and what we actually see is that companies, basically by law, are extractive rentiers. And so how are we going to address that?
No, a comment, yes. Hold that, please, and we'll come back to what you just said in a moment's time. So you wanted to speak.
So just to take issue with what Sir Vince Gable said, that a social enterprise, by definition, will not be successful. So can I talk about employee ownership trusts? They're not social enterprises, but there's two examples. One local to us in York, led by Julian Richer of Richer Sounds. He works in a highly competitive industry, high street, hi-fi shops, and selling hi-fi and television. And the other is Riverfed, who distribute organic vegetables throughout the country. They're both employee-owned. There is no external capital other than through conventional bank loans, I'm guessing. And they succeed because they are owned by the employees and the profits of the company belong to the employees. So the social benefit comes from a well-paid workforce who have secure employment. But a question for Charlotte Jones. So we have a business that's run for 34 years in York. And recently we joined the Good Business Charter, which was set up by Julian Richer. Now he promises a percentage, not a fixed amount, a percentage of his company profits to go to the staff. And he also promises a percentage to go to charity. Would Aviva ever consider doing that?
Yes, we're drifting away a little from the issue of regeneration, but that's fine. I'll give Charlotte the chance to respond.
So Aviva has a whole series specific for our own employees. We have a specific set of arrangements that enable ownership of shares. We have good arrangements for them to participate very effectively and efficiently in the share schemes that we offer. So there is a very broad take-up of that. There is particularly in York, there's a longevity of employment and a real interest in the success of Aviva, and a lot of our staff contribute to the staff scheme. Contribute by joining these share-based the share schemes. We also have a lot of money that is contributed to charities. We have a lot of our people that do volunteering days. In fact, we encourage, almost expect our employees to do a number of volunteering days each year. They do that around all sorts of things that they're passionate around, that support the local community, into schools, into a range of things. And we don't have, whilst we have corporate wide link-ups with the World Wildlife Fund, we enable and sort of match any fundraising that our people do for causes that they see as appropriate. So I think within the context of us as an employer, we try to offer all of those holistic ways for the staff to get involved in the company, but also in the community, and we give them support and matching for them to carry out that sort of philanthropic activity. So we aim to be a very holistic employer. We take on young people from local schools, give them work experience, help them with CV building. So I think we have a broad interest, and in the confines of being a publicly listed company.
If we just guide it back to our topic of regeneration, and just to the point that our friend in the red shirt made here, deeply sceptical view really of the role of business, and I suppose as a local councillor, as deputy leader of the City of York Council, Kilbane, something that might concern you.
Indeed, yeah. Thanks, Jonathan. Just tidy up a couple of things first as well from previous points that were raised. The profit share scheme did go, Vince, and it went because the company offered the employees double profit to give it up, and they all snapped their hand off and leaving their union rep looking a little bit silly, to be honest. But that's kind of how it went. In terms of local community involvement with regeneration projects, the barrier to local community involvement in regeneration projects is the price of the land. If you're going to maximise the value of the land, then local communities can't afford to buy that land, so they then become reliant upon whoever's developing the project to involve them, and that is a position that we are in York at the moment. I think I would love to philosophically debate capitalism, but there's not a big appetite in the room for it this morning. I think mind you, it's only 10:30. But so I think as we're sat here now, private capital investment is the only game in town for regeneration because of the the limits that are put upon local authorities. We are very, very starved of cash. So what's really important for us is making sure, as much as we can, with the powers that we have, that whoever is involved in any regeneration schemes is aligned with the principles and values of the city and what it's trying to achieve. And I can see hands going up, and there's a politician talking, so I'll leave it there.
My mind goes back to what Greg Dyke said in a session that took place here yesterday about the development of the York Central site, and talking about his vision for the future and more community involvement about creating buildings, whether they be office buildings or people's homes, that were more in keeping with the nature of the City of York, the historic city, but also creating far more affordable homes than is currently in the plan. Gentleman at the back with his hand up, can we get a microphone to him, and then we'll come to the lady in front of him.
Thanks. David Cleveley. I come from Cambridge, and just a couple of things. Firstly, on the tech side, it'd be inconceivable to have a startup company or any company in Cambridge that didn't have profit share and share ownership. It's just, and best even if you include employees on the board, frankly, because then you get all the alignment and you get the kind of motivation you need, right? So that's a fundamental principle about how you should organise companies. But put this one aside, because I want to put this point about the development. Cambridge is the fastest growing city in the UK. It's been doubling every 10 years, and it's about 1/3 the size of the economy of Yorkshire. It's got 23 $1 billion companies out of a town of 130,000 people. But what has happened, and I've observed this since I've lived in Cambridge since '76, is that the influx of private capital in the way that we've just been describing is changing the character of Cambridge. And instead of having a varied city with lots of little crinkly bits in it, the kind of thing that we all enjoy living in, you now have big slabs of development. And although the developers, talk about varied development and having local schools and other bits and pieces, and those have been included, if you go to Station Square in Cambridge now, which used to be a higgledy-piggledy, rather ugly kind of thing, but had some character, it now looks like any other slightly boring modern development, and it is a private square. It is not a public square. I was involved in the idea of putting up a statue and a few other pieces in that square, and we were told that if we did it, it would belong to the people who owned the land. We no longer, as the people of Cambridge, would have ownership or access to it or any rights to any of it. So it would simply be, it was out of our control. What we are doing with this blurring about what is public and what is private, and getting all this private money in, is we are giving up control of our public spaces, and we are also, if you expand it as fast as the city of Cambridge does, you're also giving up control about how your neighbourhoods actually develop. The higgledy-piggledy human scale of things is being lost.
Thank you. Back about Cambridge, and ask you, Sir Vince, to talk about this and the whole business of cities being turned into big slabs of corporate investment, and we lose the higgledy-pigglediness. Obviously, higgledy-pigglediness is one of the things that York specialises in.
Yeah, well, I grew up here and I lived in Cambridge, so I've seen both. And you know, but of course, this is something you have to protect with the planning system. But we come back to the sort of fundamental point with regeneration, which is how you share the risk. And if I can come back on the Docklands point, because I think it illustrates it very well. A lot of things you said are true. You know, there were a lot of subsidies thrown at it, particularly through public transport. And it was undemocratic because at the end of the day, it actually happened. It was done. You know, square miles of derelict land are now a flourishing residential, commercial, community area. Otherwise, it would never have happened. And all communities run the risk with their development generation projects of leaving just a hole in the ground. I just cite my own borough, which is Twickenham, as I was the MP, and it's a lovely kind of upmarket London suburb. But right in the middle of it, there is an area of derelict land that has been derelict for 50 years because a swimming pool closed down, and successive councils, and it tends to be the Dem or Conservative, couldn't agree on who carries the risk, right? So you have a private developer working with the council, the community object, this is all exploitation, too much profit, we want more community. So the private guys back out and the project collapses. So they then start all over again. And this has happened, I think, 7 times in the last 50 years, and there's nothing, it's just a derelict site. So at some point, you have to take the risk of saying, you know, we have a developer, they're going to make it happen. If the project turns out well, they're going to make a lot of money. And if it turns out badly, they're going to lose the money rather than the local community. And actually, that's what's happened in Dockland. The people who promoted it never anticipated a pandemic and that people would start working from home. So kind of all the vast profit they were going to earn from these city banks in offices, I mean, this is now collapsing. But they're taking the risk, not the government or the council. And so you've got to take that risk eventually. I know this is a rabbit hole you don't want to encourage, but can I just quickly respond to the social enterprise point? I'm not against it, and I've devoted quite a bit of my life to working in social enterprises and making them work. But they can't work at scale. They can't work at scale because somebody has to take the risk, right? And either the workers put their life savings at risk, which you can do in a worker enterprise, or you've got to have private equity, and then it ceases to be a social enterprise. But you know, there are lots of them. They work on a small scale everywhere, and they're beautiful, and I'm all in favour of it. But running big projects, big systems, somebody has to take the commercial risk.
Okay, thank you. Gentleman here.
Hello, I don't work with elves. I've never had a letter from Margaret Thatcher, thank God. But I have spent the last 15 years working with large businesses around digital transformation, change, how they get involved with the community, etc. What can they actually do differently? And one of the things that often comes up on slides is a quote from Einstein. You can't use the thinking that got you there to get you out of the situation you're in. And what I find fascinating this morning is hearing about philanthropy and Margaret Thatcher and all these things. It's really, really fascinating. So my question would be, why today have we not heard, because this is the advice I give to large companies, before you do anything, go out and find out what other successful people are doing. So why have we not heard today about what other countries are doing? How other people outside of this navel-gazing community are actually solving the problems?
Can I just ask, quite clearly, you've got some expertise in this field. Have you got some examples that you can give us that you think we ought to refer to?
I work as a consultant, as a coach. I don't give examples to anybody, but what I ask them to do is think differently about their problem by actually not going round in circles with what we've already done, what we already know. Go out and find out what other people are doing. Talk to other people. We're only a small country. Other people are being successful. I was on a train one day and a guy next to me was working in Scandinavia and he'd been working there for quite some time, and he said, do you know, he said, what I find really fascinating is that in these countries, the politicians are actually very highly paid administrative, successful business people. And they get involved in these projects and they do them differently because they see their politics and business in a different way. Now, I'm not saying that's wrong or it's right. We don't even entertain the possibilities that are out there. We're still talking about Terry's and philanthropy and the nature of capitalism. It's not practical. Let's be a bit more realistic and go out and find what's actually happening in the world.
Okay, Charlotte, as our representative of big business, I suppose, on our panel, is there the willingness and the courage to think outside the box?
Better view. Well, I suppose from our side, we've got. No more birds and fairies. So look, we try and look innovatively at the model that we use for investments. So if you take as an example, we have a sleeve of money that we put into ventures, which is all about the startup side, and then we have a pool of money that we put into development, and then we have some of our investment funds that also look through for the longer term. So we're really focused on life cycles. And I think we've built that model by looking at what has worked elsewhere and looking at the best components. So to your point, are we looking outside the box to things that can really be impactful? And when we the startups, how do we keep them safe and not sort of swamped by the mothership of Aviva? What does it really take to make a startup work? How can they have the extra advantage though of being connected to Aviva? So I think, to your question of how do we look outside the box, certainly in our investment and the things that matter to the communities that we play in, but also are critical for the success of Aviva's overall mission, I do think we look at many models and try and build those together.
Thank you. I could see some hands up over here. I'll come to you.
Hi, as an entrepreneur and the founder of very proudly a for-profit and for-purpose startup, I actively look out for impact investors, and so people that want a social return as well as a financial return on their investments. I'm seeing it from a very small point of view. I was interested in the panel's view of the rise or not of impact investing and what might be done to encourage that, because from my point of view I'm seeing more people who are going into founding startups because they want to do good in the world, not because they want to get super rich. So how could you help us? That would be great.
And I'll take another question as well. Gentleman at the back there. I'll pass the microphone to you, sir. I'll come to you in a moment, man.
There you go. Thank you. It's a comment rather than a question, but universities are place-based institutions which are capable of helping big business and small business and everyone else to play an important role within the communities, bring in lots of research funding, educate lots of students, some of the most successful businesses in our towns and cities. So it's just any thoughts anyone had on some of the work around things like the Civic University Commission and some of the new models that we're seeing spring up across the country. Some of those are maybe things that people might want to look at and think about the ways in which we can all help big business to play an important role for the not just the physical but also the socio-economic role within our communities.
Okay.
Thank you. Marlene Emerson from Penny Ashton Forum. I just want to make a couple of comments, encouraged by that gentleman who raised about looking outside of the country, because I'm originally from Singapore. And first comment is that even if the state or the local council gets involved, in Singapore, all our tube stations, the MRT stations, they're built by the state, and they're all very samey, and they're all 6 steps above, so that in case there's a rise in sea level, it won't flood the station. So that's the first observation. The second one is to say that we do have in London, and probably in the rest of the country, a lot of investments from overseas anyway. So it's not just looking within the country. And these investments, the overseas companies are taking the risk. Where I live in Richmond, we have this development that's been held up for years now because of objections from the local community, and it's a Singapore-listed company that's taking the can. So we are spreading the risk overseas.
Thank you very much. I don't think we're going to get our second microphone back, are we? I think the birds have flown away with it. I'm just struck by the idea that we've got about 5 minutes left, and I want to give you plenty of time to move on from this session to the next one. So I'd like our panellists to address whichever of the points the audience have made that they feel are applicable, or maybe there is a subject. No one's uttered the expression levelling up. We've barely talked about devolution. We've not talked about the importance of transport links or any of the things that I assumed would come up this morning. We've not touched on any of these yet. So we've got limited time. Pete.
And quite clearly we haven't talked about climate either, and the role of regeneration in dealing with the disaster that we face in terms of climate change. Just very briefly, in terms of impact investment, I think there are a lot of people out there looking for companies that deal with climate challenges that we face, etc. And there are a lot of people who will invest locally. I think one of the jobs of the council is to enable the spaces for those businesses to grow and the infrastructure for those businesses to grow, and that's something that we're on with. I'm going to return to the philosophical question and as to the reason as to why it's important, because we often heard the phrase Tina, there is no alternative. I tend to think of it as Tinker, there is no current alternative, because we are essentially living in a world that was described by post-war Austrian economic philosophers, and that is the way that we have lived for the last 40 years, and that sets the boundaries that we operate within, which is where we see the debate on Docklands with Vince is right, it got built, and the gentleman there is also right, it caused an awful lot of damage to the communities that lived there during the time, and they're the things that we're trying to resolve within the parameters that we currently have, and we need to think about those things as we address the larger questions, because it will inform your view on who are the right people that you want to do business with when we're getting involved in large-scale regeneration programs. Is it people that move more towards the Roundtree side of it, which wasn't philanthropy, which was actually a belief that they didn't own all of their profit, or is it more the BlackRock who'll get it done, but you'll pay a price for it?
So Vince, a minute or two from you.
Well, I'll just pick up the one point about copying from overseas, and Merlin is quite right that we have a lot of overseas companies here anyway, and we look at overseas models, and the truth is none of them are comfortable. I mean, the country that has been overwhelmingly the most successful at regeneration is China, because of the sheer scale and speed of the rebuilding of cities, the infrastructure, and so on. But even assuming that you want to adopt the Chinese political model, that people might have some reservations about, the problem is that this massive juggernaut has now got into a position where they got the demand wrong, and they've got a massive overhang of property in the market, which is potentially bankrupting one of the world's most successful economies. So even they could get it wrong. And the Singapore case, which Merlin mentioned, which probably one of the best in the world, where it has a very intelligent use of public and private sector, where basically public sector pension funds are used to finance vast amounts of social housing, where almost everybody lives, surprisingly, in Singapore. It's mostly social housing for even the middle class. But the economy's kept going, and the wealth is created to enable these pension funds to make money and to invest, because they have an open door policy to oversee investments and very low levels of tax. So it's whatever model you choose, you're faced with this underlying problem. Somebody has to take the risk, and somebody has to finance the social costs.
Thank you, Sir Vince. And as you started us off, I'll let you finish. 1 minute.
1 minute, and I'll come back to the point about working with the universities. And a really tangible example of that is Bio Yorkshire. We're working very closely with the university, and I was on a panel yesterday with Charlie and with George to just try and talk about how do you get co-funding public and private sector moving quickly, because there's so many brilliant ideas coming out of the research at the universities that if you've got entrepreneurs that can take that through and you can really drive some investment in that, then that could be a whole exciting theme for this region, and I think it's got some momentum. But that sort of business working with the university and then providing the opportunity for others to come in with some investment in venture side of it is a very exciting development.
What a good note on which to end. I hope you've heard something today that's stimulated some thought. I hope you've enjoyed the dialogue and the conversation. There is a whole day of it ahead of you. Enjoy your next session. Great Peter will chime any moment now. Enjoy the rest of your day, and thank you for coming along to the Big Tent.